Welcome back to ZBCN Today, the channel where we cut through the noise and focus on what actually matters. ZBEC Network's recent partnership activity highlights a structural shift that many market participants have overlooked. Alpha Lion recently pointed out that ZBEC has partnered with World Liberty Financial, an entity with direct ties to the Trump administration. This development goes beyond a routine headline announcement. World Liberty Financial has filed with the Office of the Comptroller of the Currency to launch a national trust bank with the objective of issuing and custodying the USD1 stablecoin. This signals the construction of regulated institutional infrastructure, including compliance frameworks and banking rails that connect crypto markets to traditional finance systems. Historically, projects that align with regulated financial institutions are better positioned to survive market cycles. This is not speculative momentum. It represents infrastructure development, and infrastructure-driven platforms have often delivered asymmetric returns once the market recognizes the scale of what has been built. Turning to market structure, recent technical analysis further supports this evolving narrative. Aman, a technical analyst, reviewed ZBCN's 4-hour chart and identified what he described as a textbook bullish momentum setup. The chart shows a large bullish pennant breakout following a period of tight consolidation. In this pattern, price initially moves sharply higher, then compresses within converging trend lines while volume declines, reflecting equilibrium between buyers and sellers. According to the analysis, ZBCN consolidated from approximately 0.38 down to 0.27 during this phase. As volume contracted, price stabilized, and the breakout ultimately occurred through resistance near 0.31 with strong volume confirmation. This type of structure is typically associated with accumulation phases, where longer-term participants position ahead of continuation moves. The measured move projection from this breakout implies short-term upside potential of approximately 20 to 30%, targeting a range between 0.40 and 0.43. Given the volatility inherent in crypto markets, stop losses below 0.0030 are cited as prudent to manage downside risk in the event of retests or broader market instability. Everything you hear on ZBCN Today is for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Looking beyond short-term price action, longer-dated projections for 2026 place ZBCN in a range between approximately 0.23 on the bearish end and 0.94 on the bullish end, with averages clustering near 0.38. These forecasts factor in DeFi adoption, Solana ecosystem growth, partnerships such as Visa, and broader market sentiment. Under more optimistic conditions, returns of up to 174% are projected if a broader crypto bull cycle materializes. Conversely, bearish scenarios driven by regulatory pressure or competitive intensity could cap prices closer to 0.26 by mid-year. These scenarios underscore the sensitivity of ZBCN's valuation to both macro conditions and sector-specific adoption trends. However, the longer-term investment thesis extends beyond price targets and chart structures. Crypto Queen recently examined ZBEC's position within the broader digital asset ecosystem, framing it as a PayFi and real-world asset infrastructure platform. ZBEC's core focus areas include real-time payroll streaming, multi-chain debit cards, deep PIN integrations for point-of-sale hardware, and bridging crypto rails with traditional financial systems. The project maintains partnerships with Chainlink for oracles, IoTex for deep PIN infrastructure, Ondo for real-world assets, and Circle for stablecoins. Collectively, these relationships position ZBEC as a provider of compliant, enterprise-grade infrastructure for instant payments and asset tokenization. The network is reportedly processing more than $65 million in annualized payroll across over 65,000 workers in more than 100 countries, indicating measurable adoption and real-world utility. This trajectory mirrors patterns observed in earlier enterprise-focused blockchain projects that initially addressed niche payment or asset use cases before accelerating during broader adoption cycles. Hedera Hashgraph provides one such comparison. Launched in 2019 with limited attention, Hedera experienced a sharp expansion during the 2021 bull market, rising more than 1,500% from roughly 3 cents to 57 cents at its peak, reaching a market capitalization of approximately $7.5 billion. That appreciation was largely driven by enterprise partnerships and real-world asset pilots, including supply chain and payment integrations with corporations such as Boeing. Hedera also operates ISO-compliant payment rails, similar to ZBEC's alignment with ISO 2022 standards for global payments. Both networks feature relatively low circulating supply compared to total supply and incorporate deflationary mechanisms through staking, fee burns, or revenue buybacks. After the bear market, Hedera consolidated before rebounding approximately 300% in 2025 on the back of DePIN and payment integrations. If ZBEC achieves comparable enterprise traction through its super app and point-of-sale DePIN rollout, projections suggest potential growth of 10 to 20 times from its current market capitalization of roughly $310 million, implying a possible valuation range of $3 to $6 billion. Algorand offers another relevant precedent. From lows near 20 cents in 2019, Algo rose more than 1,000% to approximately $2.80 in 2021, reaching a market capitalization of about $12 billion during its FIFA partnerships and real-world asset initiatives. Algorand's emphasis on high speed, low-cost payments, and ISO 2022 compliance parallels ZBEC's approach to multi-chain payroll infrastructure and card ecosystems. Both platforms prioritize real-world financial applications, with Algorand targeting central bank digital currencies and remittances, while ZBEC emphasizes instant wage access and tokenized assets through partners such as Swiss Cheese for stock spending. ZBCN's current price is approximately 0.003, with circulating supply near 98 billion tokens, which aligns with Algorand's earlier growth phase. With similar milestones ahead, including mobile application launches and global expansion, ZBCN could plausibly target price levels between 8 cents and 12 cents, translating into market capitalizations of approximately $8 to $12 billion if real-world asset adoption accelerates. Ripple and XRP provide an additional historical reference point. During its early discovery phase in 2017, XRP surged approximately 36,000%, rising from 0.6 cents to $3.40 and reaching a market capitalization near $10 billion on the back of bank pilots and payment integrations. XRP's core thesis centered on instant, low-cost remittances and settlement, which parallels ZBEC's focus on real-time payroll streaming and multi-chain bridging across 19 chains, with a 20th planned. Both target the global payroll and remittance market, estimated at over $9 trillion annually, and emphasize compliance frameworks. XRP navigated regulatory scrutiny from the SEC, while ZBEC implements KYC and AML through acquisitions such as GateKnox. Partnerships remain central to both ecosystems, with XRP working closely with financial institutions and ZBEC partnering with Ripple, Uphold, and Facet for Southeast Asia expansion. If ZBCN were to capture even a fraction of XRP's historical performance, price levels above 10 cents become feasible, implying market capitalizations exceeding $10 billion as PayFi adoption scales, particularly with global crypto card volumes reportedly reaching $1.5 billion per month. The macro context for 2026 further reinforces the strategic positioning of platforms like ZBEC. Real-world assets are projected to enter the mainstream, with tokenized assets expected to exceed $20 billion on-chain. Stablecoin payments continue to scale across jurisdictions, embedding blockchain infrastructure into daily financial activity. ZBEC's development trajectory aligns with this environment, emphasizing regulated payment rails, institutional-grade compliance, and infrastructure designed for long-term adoption rather than speculative trading cycles. For market participants navigating this landscape, the central implication is the importance of distinguishing between narrative-driven momentum and structurally grounded development. Institutional infrastructure often forms beneath the surface before price discovery reflects its significance. Studying historical adoption arcs from projects such as Hedera, Algorand, and XRP provides a framework for understanding how enterprise integrations, regulatory alignment, and real-world utility have historically catalyzed sustained valuation expansion. If you're getting value from this kind of focused, fundamentals-driven ZBEC content, make sure to hit the like button, subscribe to ZBCN today, and turn on notifications so you don't miss future updates. It directly supports the channel and helps this research-driven community grow. Drop your thoughts or questions in the comments. I read them all. Now, let's continue with the real analysis.